Hi everyone. Chainlink is dropping again. But the real question is not that it's falling. The real question is why it's falling. Because if you think this move is about Chainlink's fundamentals, you're completely looking in the wrong direction. What we're seeing right now is not a breakdown in the project. It is a reaction to macro uncertainty, shifting liquidity conditions, and aggressive trader positioning that got squeezed all at once. This video is for informational purposes only and is not financial advice. Always do your own research or consult a professional before making any investment decisions. Over the last 16 hours, Chainlink has seen a sharp decline of around 3%. And at first glance, that might look like normal volatility in crypto. But when you zoom out, something important becomes clear. This is not an isolated Chainlink event. This is part of a broader risk-off move hitting the entire crypto market at the same time. And whenever the entire market moves together, the driver is almost never project-specific news. It is almost always macro. The main trigger this time came from the latest Federal Reserve meeting in the United States. The market was already sensitive, but what really changed sentiment was not just interest rate expectations, it was communication itself. Under the current leadership of the Kevin Warsh, the central bank signaled a shift in how it communicates with markets. The idea of reducing forward guidance and potentially limiting press conference clarity created a new layer of uncertainty. Now that might sound like a technical detail, but in financial markets, communication is everything. The Federal Reserve doesn't just set interest rates, it sets expectations. And when expectations become less clear, markets immediately react by reducing risk exposure. That is exactly what we saw across crypto, a fast, synchronized sell-off as traders moved into defense mode. But here's where Chainlink becomes interesting, because this move was not just about macro, it was also about positioning. Before this drop even happened, Chainlink's market structure was already unbalanced. On one side, you had spot accumulation from larger holders, slowly building exposure. On the other side, derivatives traders were increasingly leaning short or hedged. That means the market was already split and fragile before any external shock arrived. So when the Fed-driven risk-off sentiment hit the market, it acted like a trigger on a loaded system. Short positions started gaining momentum. Leveraged longs came under pressure. And as liquidations started to build, the move accelerated far more than fundamentals would justify. This is a classic crypto structure. When positioning is crowded, price doesn't move gradually, it snaps. At the same time, something important was happening in the background. Large holders, often referred to as whales, were actually increasing their Chainlink exposure during this period. That tells us something critical. While short-term traders were reacting to macro fear, higher conviction participants were not necessarily abandoning the asset. Instead, they were likely viewing the move as temporary volatility rather than a structural breakdown. But even whale accumulation cannot stop short-term market mechanics once derivatives start cascading. Now let's talk about structure. Chainlink is currently sitting around a major technical zone in the $7 to $8 range. This is not just a random price area. Historically, this zone has acted as a key support region where buyers have repeatedly stepped in. But the important detail is how price is behaving around this level right now. So far, the reaction is not impulsive strength. It is corrective movement. That means every bounce is being met with hesitation, and the market is still deciding whether this level can truly hold under macro pressure. In simple terms, buyers are present, but they are not fully in control yet. Now here is the part most people miss. Despite this price drop, Chainlink's fundamental story has not weakened at all. In fact, recent developments have been largely positive. Chainlink continues to expand its role as core infrastructure in decentralized finance and real-world blockchain integration. For example, Chainlink Labs has been actively involved in major ecosystem growth. One key development includes Trace Finance, raising a $32 million Series A round with Chainlink Labs participating as a strategic backer. That signals continued institutional-level confidence in Chainlink's infrastructure role. We've also seen continued expansion in transparency tools like Proof of Reserve, including applications such as CIRBTC launched by Circle, which relies on Chainlink's verification systems. And beyond that, Chainlink's price feeds remain deeply embedded in major DeFi platforms like Aave, powering critical lending infrastructure. So when you line everything up, something becomes very clear. There is no Chainlink-specific negative catalyst driving this move. No broken partnership, no failed upgrade, no collapse in adoption. Instead, what we are seeing is a combination of macro uncertainty from the Federal Reserve and heavily skewed market positioning that amplified volatility. This is important because it changes how you interpret the entire move. If this were a fundamental breakdown, the narrative would be different. But what we actually have is a liquidity-driven correction happening inside a fragile positioning environment. And in crypto, that distinction matters a lot. Because macro-driven drops can reverse quickly once sentiment stabilizes, especially when the underlying fundamentals remain intact and long-term participants continue accumulating. So to wrap it all up, Chainlink is not falling because something is wrong with Chainlink. It is reacting to macro uncertainty, shifting Fed communication expectations, and a derivatives market that was already tilted before the move began. The $7 to $8 zone is now the key area to watch, not because of panic, but because this is where the market decides whether this move was just noise or the start of something deeper. Thanks for watching. If you enjoyed this video, make sure to like, subscribe, and turn on notifications so you never miss the next update. See you in the next one.